Hello everyone, and welcome back to the Rogne Homes channel. I'm Kristen Rogne. Today we're going to break down the four most common home loan programs buyers use. And we're talking about this for a few reasons. First, the right loan strategy can literally save you thousands of dollars. Second, not all mortgage loans are created equal. And third, the type of loan you use can impact things like your monthly payment, how much money you need up front, and sometimes even how competitive your offer is. Now, just a quick disclaimer before we jump in, we are not licensed lenders, so this video is meant to give you a general understanding of the different loan options out there. You'll always want to talk with a lender to determine what's best for your specific situation. And if you need a few great lender recommendations, we've actually included some down in the description. When most people start to think about buying a home, they assume that there's basically one type of mortgage. But in reality, there are several different types of loan programs, and each one is designed for a different type of buyer. Understanding these options early on can make the entire buying process a lot smoother. So today, we're going to walk through those four loan programs that most buyers should know about. First up is the FHA. FHA stands for Federal Housing Administration, and this program was created to help make home ownership more accessible. FHA loans are especially popular with first-time buyers because they tend to have more flexible requirements. For example, down payments can be as low as 3.5%. Credit score requirements are often more forgiving, and sometimes higher debt-to-income ratios are allowed. So for buyers who are earlier in their financial journey, FHA can be a really helpful way to get into a home sooner. Now, one important thing to understand is that FHA loans include something called private mortgage insurance, often referred to as PMI. This is essentially insurance that protects the lender if the borrower defaults on the loan. With FHA, that cost gets added to the monthly payment and stays for the life of the loan. Because of that, the monthly payment can sometimes be a little higher compared to other loan types. But for many buyers, FHA is still an excellent entry point into home ownership. Next up is the VA loan, which stands for Veterans Affairs. This is honestly one of the best loan programs available in the United States. VA loans are available to eligible military service members, veterans, and some surviving spouses. And they come with major advantages. For example, 0% down payment, no private mortgage insurance, and very often competitive interest rates. That combination can dramatically reduce the amount of cash needed to purchase a home, which is why buyers who qualify for VA financing often choose to use it whenever possible. If someone is eligible for a VA loan, it's usually one of the strongest options available. The third loan type is the USDA loan, which stands for the United States Department of Agriculture. This one surprises a lot of people. Many buyers assume USDA loans are only for farms or agricultural properties, but that's actually not the case. USDA loans are designed for homes located in eligible rural and suburban areas. And they also offer some really strong benefits. For example, 0% down payment, lower mortgage insurance costs, and competitive interest rates. The main requirement here is location. The home has to be located in a USDA eligible area. But interestingly, many suburbs, even ones not too far from major cities, still qualify. So for buyers who are open to living slightly outside the metro core, USDA can be a really powerful option. And if you're buying here in Colorado, there's another program worth knowing about called CHFA. CHFA stands for the Colorado Housing and Finance Authority. This program was designed to help Colorado residents with down payment assistance. Depending on the situation, CHFA can help buyers cover things like down payment costs, some closing costs, and other upfront expenses that come with buying a home. For many buyers, the biggest challenge isn't actually the monthly payment, it's coming up with the initial cash needed to purchase the home. And that's exactly where programs like CHFA can make a huge difference. Now, there are some eligibility requirements, including things like income limits, home price limits, and completing a home buyer education course. But for the right buyer, this program can be extremely helpful. So the biggest takeaway here is that not all loan programs work the same way. The right loan really depends on things like your credit score, how much you've saved for a down payment, military eligibility, the location of the home, and your overall financial goals. Choosing the right loan structure can make a big financial difference over the life of the loan. And coming back full circle, this is why the very first step in your home buying process should always be talking with a knowledgeable lender. They can help you understand things like which program you qualify for, what your numbers actually look like, and which option makes the most financial sense. Getting that strategy right up front can make the entire process much smoother. If you want help understanding which loan program might work best for your situation here in Colorado, feel free to reach out or drop us a note in the comments. We've also included a few great lender recommendations in the description if you'd like to speak with someone directly. If this video was helpful, be sure to like and share it with anyone who might benefit. And as always, with Rogne Homes, we help your dreams find their address.